Hello, Devil Dog Day Trade community. Welcome to a live show for our daily trade analyzation and wrap up. We'll also take a look at how our results have been for the entire week. And then I want to go over a couple of trades that happened during the week that may impact how you set up your own trading plans, just in case you haven't seen them as well. Hopefully that will give you a chance to learn from other people's mistakes or other people's actions so you don't have to repeat them. So let's jump into our daily activity first. We had 3 trades from this morning. We had a Japanese yen short, Nikkei index fund short, and then also a TY short. So the wrap up for the day is really simple. None of those trades hit today, so not a whole lot to go over there. But do want to take a look at just again a couple of trades that happened during the week that may give you some indicators of how you can potentially set up your trade plan to prevent these types of things from happening. And I want to look at, we'll use the Nikkei trade from, I think, Wednesday. It was, I'll pull this up here in a Nikkei in a 45-minute chart, so NK. And I just want to go over this real quick to show you, what happened here and how to handle situations when these types of things come up. So first of all, we have our zone noted here, and as you can see, we had the entry was set right here at 28,883, and price came right up to it, but not quite there. So just a note, if you haven't seen any of my other trading videos yet, you'll know that for some of the securities that I trade, I have an entry point that is further into the overall zone, whether that's a supply zone or a demand zone, because my previous data, historical data, has shown that we'll sometimes get those deeper penetrations into the zone. It won't just hit the actual part of it. So what I mean by that is if you were to draw this supply zone over here to the left as the full entire zone, right, you would come right down to the top or the bottom of this base candle here. Right, so as you can see here, price did come up into and hit the full entire zone and then went down and hit our target down here. But because I had my entry point up here, I didn't get entry in this trade, so this trade didn't work for me. So what happens, what do you do when this situation happens? So typically speaking, what I will do is I'll put an alert on this chart at the full entry point for the entire zone. That way I get a notification if prices come up and hit this alert, but then I didn't see any entry trigger for the trade. When that happens, then I'll monitor the trade. And if price just drops a little bit, then comes up in the zone and fills the trade and then continues down, then great. We're in that trade and nothing bad happened. But if price comes all the way down and hits our target line, then what I do then is I will go in and cancel that trade, because for all intents and purposes, right, this zone worked. And so therefore you don't want to risk waiting for price to come back up in here again, take it, hit this area, and then just blow through it because the zone already worked. So in this case, I would mark this on my tracking sheet as a bad entry. Right? In other words, my entry point was too far into the zone, so it was my fault it didn't get filled. The zone worked as advertised, as it said it would, but just my entry point was wrong. You typically speaking do not want to hold on to these trades and wait for price to come back into there. Again, if you have an entry point that is inside of the overall zone. So hope that helps you understand that if this happens to you, just add a part to your trade plan so you can come up with your own rules, whatever those are. But just this is just a kind of an example of what one of the things that you can do that will help protect you from having these types of entry points in here. And if you're curious as to why I have this done, I do track all of my zones by percentage points of into the full zone where the price actually gets to, and so the historical data that I have shows that much more often than not you'll have a sorry about that thing. It looks like we just had a blip in the network there, and reconnected back to the platform. But more often than not, the price will go deeper into a zone, and the very, very close edges of the zone typically don't or won't always be the right places to get into. So over time, these entry points serve me well. In cases like this, just note this is why it happened, and there's no need to change the trade plan or anything like that just because it happens once or twice. So hopefully that helps out, so you can kind of get see what stuff like this happens without actually going through it yourself. And then just go real quick. So the overall trades that we had for the week, we had a total of 11 trades that we had posted. Of those, 5 of them were losses, 1 was a break even, and 5 of them were wins. So that gives us a 45% win rate for the week. Which again, because our a loss for us is 1 times our risk. So for this simulated portfolio, that means it's $1,000 loss per trade. Wins are 4 times, so a win would be $4,000 win. So overall, a 45% is a very, very successful trading plan. And so we wrap this week up again, very, very successful from that perspective. And it's okay to have a couple of losses. You have to lose a little bit so that you can win in the end. So that's it for this wrap up. If you like the video, please give it a thumbs up there. Give us some comments too. If you had any other trades that you saw work for yourself this week. And pay attention to the channel coming up early next week. We'll have another educational video that goes into how we track our data and what some of the trade rules that I have in my trade plan. Hopefully that'll give you a good template for what you can use to build your own trade plans moving forward. Thanks again for all the support for this week. Have a great weekend, and we'll see everyone again on early Monday morning next week.